Okay, it's Tuesday, July 9th, 2019. It's the New York trading session right now. And I'm going to answer a few questions that I've been receiving. Uh, some of them actually popped up on Friday. So the question was, am I trading? Why am I not trading that much? What's going on with the service? These are some of the questions from people that are relatively new. And I understand it. I get it. So the the question on Friday that I received a few times was, why am I not trading? And that was because, I mean, it was really obvious. If you're aware or if you're in tune with the markets, you know when there are certain holidays that could affect volume levels, and that would really lead me into what was going on last week back over here to the left. Let me go ahead and tighten this up. I talked about this in some videos last week. Actually, I made a couple of update videos talking about how the 4th of July holiday was part of the reason why price was moving into this sideways consolidation here. This is the pound dollar. The euro dollar did the same thing. I mean, this is a 60-minute chart. So this is the pound dollar. We got Wednesday, Thursday, and then Friday it finally broke out. And Friday I took a a trade here to the downside. I think it was like maybe 30 pips or so, 35 pips. I'm not exactly sure. Anyway, so everything is fine. But what I want to mention is when price moves inside a consolidation like this, I'll tighten this up one more time. When price moves inside of consolidation like this for 2 days, I'm going to get fewer trade signals. And I know that there are still a lot of people out there that will claim that they're making money during tight consolidated trading ranges like this. I'm not saying that they can't and that they're not making any money, but they're also, sometimes when you run a signal service like this or a trade copier service or something like this, you get questions from people who are inexperienced and they're not paying attention to the market. They're wondering why no trades, but it's a major holiday and they just neglect to even see that. They're not even aware of it, which is part of the reason why some of those people are experiencing difficulties with their trading anyway. There's a lot of things that are hitting them and happening around the time that they're trading, and they're not aware of these events. They're not aware of these situations that could have an impact on price and then ultimately their trade. And I'm not saying anything negative about it. Very often it's just, I mean, this is just a sober observation. It's not, there's no judgment in it at all. It's just that at that point in time, they're uh, very inexperienced and still need more. They still need more experience. They still need to understand some concepts. By understanding some of these concepts, it'll just help you understand when it could help you understand when you should and should not be trading. So again, inside of consolidation, when it's in tight ranges like this, I'm going to get fewer trade signals. Not always, but usually. So that was part of the reason why it was slow last week, and there's just a few trading days there. So far this week, again, it's Tuesday, for the most part, and this right here, right about there, is where the start of the week developed, right? That's Friday, and then that's the start of the new week. Here, we've got a relatively tight range. It moves up and then drops right back down. And then, but it still stays within what at that point I was calling the week's high, which was here at 1.2539, and then last week's low. So that's my new range of consolidation. So many of you, before you even got into uh, or maybe even considered using my service, you watch some of my videos to see how I'm trading. I've always say this. I think it's really, really important that you understand either the system, if it's I refer to it as a black box system. I always have. It's just something that I remember hearing years ago when I first started offering trade copiers. To me, a black box system is a trading system that's been set up and back tested, not necessarily forward tested by a lot of companies, by a lot of people who offer services like that. And they just back test them and they generate and execute trades on their own. I don't do that. I'm a manual trader, right? If you're using my service, you know that every trade that's executed, I am manually executing that trade. And then I'm manually, physically there throughout and managing the trade throughout the entire process, the entire time that it's open. And then I decide where I should close the trade at a specific take profit level, or if the trade's not working out, I decide when I should close that trade. That's my service. It's me using my 19 years of experience determining when I should open and close the trade, or when I should stay out of the market, when it's not a viable or the optimum environment for me to be executing any of my strategies. So that, I think, is actually a better scenario than a black box system. Black box system is just going to fire off trades all the time. It's not going to take into consideration the overall environment. It may look for certain crossovers or candle patterns and things like that, or indicator divergences, whatever it is that the system's doing, but it won't take into consideration the overall environment. So we're in a downtrend, and another question I've been receiving for the last week and a half or so is it time to start buying the euro dollar and the pound dollar? And I don't think so. I mean, we can all see that it's approaching major support on the larger time frames, right? We know where it's sitting. But very often with the first, whether it's a high or a low, after a big trending move like this, whether it's on the pound dollar or the euro dollar, it doesn't really matter which one, I don't always pick the first bounce or the first reversal candle pattern. First of all, if I'm going to do it on a 1 hour time frame, that doesn't necessarily mean that I'm doing it at the right time, and that's the exact low on the daily chart. So if the daily chart looks, let's say, something like this, we're looking at the pound dollar. This is a pound dollar, and we know that today it really started to push through that low from June 18th of this year. And if we tighten up the charts, we know, sorry about that, we know where the spike low was from January 2nd. So January 2nd, it looks like it's going for that low of January 2nd, the beginning of the year. So for the entire year, we started off here, moved up here, and now we're coming right back down again. And maybe it'll even close below that low from January 2nd, printing a continuation sell signal candle. So a lot of people are saying, is it time to start buying? Is it time to start buying? Even if they're looking at and comparing it to June's low, they're not paying attention. They may not be compressing the charts or even looking at a time frame large enough to even reflect all the way back. So anyway, enough of that. If I see a bullish candle like this on the 1 hour time frame on the pound dollar, that could just be a pullback based on the daily time frame. So you get my point. It's still, in other words, I need more confirmation. I want a trade as much as anybody else does, and I want to make money as much as anybody else does, but I want to be right, and I want to be really careful about selecting my opportunities. I know we're in a downtrend, and I know it hit some significant lows, and maybe it's pulling back up again. But that pull back up doesn't necessarily mean that it's a complete reversal. I need more confirmation than that. So on this daily time frame, to answer the question, why haven't I executed a trade on this pair this morning, there's a lot of divergence here. We can see that. I'm all about divergence if you follow my videos and my trading system. And there's a bullish engulfing candle. However, it's running right into last week's low here on Friday. And I was initially earlier using this as a continuation sell signal candle right here. So is this a sell opportunity where price could move down another 55 pips from the entry? And right now what we're looking at is just a retracement where it's retesting the level that it broke out of, and then it'll turn around and come back down and resume that downtrend. Is that what we're looking at? Or is this the real actual low where at the end of the day today we'll notice that this is maybe some kind of candle pattern here on the daily time frame, and now price is going to start moving back up, and maybe it won't go any lower to test that June 1st low, the June 2nd low. Which one is it? That's what I'm getting at. Which one is it? So I need more confirmation. If I was going to sell it again, I would be in the direction of the overall trend. I know that. But I also know that we are sitting here at some pretty significant lows. We can go over here with this low here as well. That was in December. That was December 12th. And who knows what that candle today is going to look like at the end of today. Is it going to close above it, this support low? Is it going to close below it? Is it going to ultimately end up retesting that January 2nd low or taking it out? We don't know. What we do know, though, is that it's still in a strong downtrend, and I don't have a signal or a sign yet that this is over with. The 1 hour time frame could be too short of a time frame or too quick to start picking tops and bottoms. And I don't really like picking tops and bottoms unless I have a clear indication that it's provided the structure that would support confirming a low or a high. W bottoms on the larger time frames, 3 pushes to a high on the larger time frames in either direction, whether we're talking about highs or lows. Those are in the membership area. But those are some of the strategies that I use, and I don't have full confirmation that I'm looking at a W bottom pattern yet that's over with that would confirm a possible bounce and a significant move back up. So I would wait. If in situations like this, when I see this on the 1 hour time frame, I want to trade this. I want to trade this. I want to sell it. I want to go long, but I want to be right. And I want to know that if I'm going to go long, it's going to hit my target. I'm sorry, if I'm going to go short, that it's going to hit my target. If it's not going to hit my target and it looks like it's going to pull back up like it did, then I'm going to wait it out and stay out and wait for the retracement and let it retest the level that it broke out of, which is really, really common. I learned this method when I first started trading back in 2001 and 2 from John Bollinger. And he didn't invent it. It's an old strategy. Everybody, yeah, I mean, when you've traded long enough, you learn this particular strategy and this technique. Whether you use it and you have the patience to use it is another question. But basically, you're looking for the breakout and not necessarily participating in the breakout and waiting for the retest of the level that it broke out of, and then looking for the confirmation and an entry to get back in that direction. The difference here is that this is happening at these lows. That's the difference. And that's why I'm hesitating. If it was in the middle of this downtrend here and we had a ways to go, then it would be a lot easier for me to just see a retracement, look for a Tech 1 reversal candle pattern, and then sell it again. But again, eventually this downtrend is going to eventually stop. Let me tighten this up one more time. You'll notice that this has been in a downtrend for a while. I use the Fibonacci tool. When a trend is strong, I use it on the daily, I use it on the 4 hour, I use it on the 1 hour. I use it on the daily 30-minute as well sometimes when I'm picking real quick short-term trades. But for the most part, you can see that these extension targets, and I talk about this all of the time in most of my videos, these extension targets repeat and are tagged over and over again if you use the Fibonacci tool on the right price swings and the right levels to give you these targets, to show you where price is likely to stop or stall and turn around. And right now, we've reached that extension target. And remember, these numbers aren't always perfect. Sometimes it's going to go a little bit lower or fall just a little bit short of it. But it gives you a really good idea. I mean, we're talking about from a couple of weeks ago, identifying this new A high, B low, C retracement to the 618, and then looking for these extension targets all the way back down. Where should we be prepared to either lock in profits or anticipate some kind of a bounce? Whether it's a major reversal or not, just some kind of a bounce where price is likely to stop. Now it's really extended this downtrend. And not only has it hit this extension target, but then again, when we go back to this daily time frame, this is what we're looking at. I'm going to put this down here and we're going to see what this looks like at the end of the day. Sorry about that. Try to get that as close as possible. This is a daily time frame again for the pound dollar. So we're going to pay attention to see where today's candle closes in relation to these two support lows. Okay, so enough of that. Back to what I was saying. It's just a matter of waiting. I mean, again, I want to trade as much as anybody else does. And I know that if you go to some of these other sites, they're trading a lot. Maybe they've got a trading strategy. I can't say. Maybe they've got a trading strategy that allows them to really make a lot of trades in this kind of condition, in these conditions. It's not to say that it hasn't been moving. It has been moving. And there are other ways, of course, that maybe I don't do it, trade it, where they could sell this right into support. But I'm all about confirmation. I don't want to sell into support if it's going to bounce. And I don't want to buy into resistance if it's going to pull away from it. I need confirmation. That's why I wait for, if the next step, if I can't get the reversals, is to wait for the breakouts. And that's why I use the continuation breakout trade. They're different strategies for different environments. And then if there's a breakout that I don't participate in, then I wait for the retracement, which is what we're looking at now, to the level that it broke out of. And then I look at the 30-minute chart looking for a possible reversal to sell it again. But again, even if I don't sell it, then maybe it doesn't look like it's going to go any lower because of everything that I'm looking at here on the daily time frame. Maybe this is the low that we've all been waiting for, and maybe it's going to start reversing and going back up for the next 30 days, for the rest of this month, or something to that effect. You get my point. But I want to be careful. It's easy to look at this in two different directions, in two different ways. So I want to be really careful. As much as I wanted to sell it, it clearly looked like a few hours ago that it wasn't going to hit my 55 pip target. So the next choice was to let it go, stay out of it, watch for the retracement, see where it stops. Now, if this is actually the low, I talked about how I don't like to pick tops and bottoms. I think that you can lose a lot of money running around trying to pick tops and bottoms, because if you're not paying attention to the overall trend and the larger time frames, like I've just gone back and forth and shown you here with these two charts, the daily and the 1 hour, a lot of people just trade off of whatever time frame they're looking at, and they'll try to pick tops and bottoms when it looks like this. And sometimes they'll win and sometimes they won't. I need more confirmation than that. So what I would do in a situation like this, if this is actually the low, and I don't trade the first reversal candle like this, I'm going to be looking for the new A low, B high, and then either a new range of consolidation and a breakout to the upside, which would be a continuation breakout trade, which would pay me 55 pips. And at that point, when that happens, because of the benefit of time passing, then I can go back over here to the daily time frame and I can confirm that it's bottomed out. So my trade to the upside with a breakout here with a new A low, B high, and then a continuation breakout trade to the upside, that would be confirmed and I wouldn't hesitate with that trade. Or if it's going to be a sharp move, it needs to be an an A low, a B high, a C retracement, something to that effect, if it looks like it's going to continue all today. And then maybe I'll trade the next C pullback with the new A low, B high, C retracement. And then there would be some kind of a candle pattern that would confirm that this is going to go up a lot higher. So all of that could take a little while. I may not execute a trade here in the next hour or two. I might end up waiting again another day. So to answer the question, why haven't I been trading that much? Because we're going through a pretty interesting transitional phase here where the market needs to be a lot more careful. People participating, people trading. We need to be a lot more careful. We're approaching major, significant support lows here. And we don't know if we're going to get a full reversal or if it's going to close below these major lows and then continue a lot lower. Obviously, we can line it up with comments out of the UK and economic announcements and things like that. But technically, this is what I'm looking at. So again, as much as I want to trade as much as anybody else. I'm not going to jump in and out due to pressure and questions about, why aren't you trading? A lot of other companies will do that, and a lot of other traders will do that, and that's usually where they start making a lot of mistakes. They cave into a lot of that pressure. I'm going to do what I'm supposed to do here, and I want to be right 100% of the time. This is only going to last so long. Even if it lasts the rest of this week, it's 1 week or a week and a half out of the summer, and then we get the rest of the time where it breaks out and starts moving and trading the way it was in June and in May. It always comes back. It always comes back. The trick or the key in successful trading is in knowing when we're going through these transitional phases and paying attention to your signals according to your trading system and then honoring that. Not jumping in and out just because you're bored and because you want to try and make some money, but paying attention to the signals, paying attention to your rules and your trading plan and following it. And if your trading plan and your signals and your system is telling you there's no trades right now, then there's no trades right now. That's one of the hardest things to accept. A lot of traders, and I know what I'm talking about because I did this. I did exactly, if you're doing it, I know what you're going through. I did the same thing. When I developed my trading system, when there wasn't, and this was back in 2001, 2002, when there wasn't a trade signal according to my system, I got anxious, I got antsy, I wanted to still find some trades and make money. I had been sitting there at the desk for 8, 9, 10, 12 hours, and yet there was no trades. Well, maybe it was because it looked just like this, consolidation. So what would I do? Out of desperation and the desire to trade, I broke the rules. I took trades just because price was moving and I didn't have a signal. And then ultimately, at the end of the day, I would end up with more losses. That's what happens if you break your trading rules. Now, sometimes we know, and I say this quite a bit, we know that we can sometimes break all of the rules and yet a trade will still work. But that is another trick. That's another trap. It's like if you walk into that, if you think to yourself, okay, well, the last time it broke all of the rules, yet it still worked. So this time it's not lining up according to my rules, so I'm going to try it. It's going to fail. You don't want to do that. You want to stick to the rules all of the time. Even if you know that it's going to work and it's breaking all of your rules, don't do it. You know what I'm talking about if you've experienced something similar to what I'm explaining here and describing. It's a test. It's a test. It can also be considered a trap. I mean, the market is always moving like this. The market isn't going to remain in this perfectly structured little thing where we can always count on it every single day at the same time and do the same thing over and over again. If it was that easy, you know where I'm going with this. Everybody would be doing it. And no one would need to talk to anybody about it. Like we would read it in a book once and then that's it. We would all be making money forever. I mean, even the most experienced, the most that's for lack of a better word, the most experienced traders with all of this knowledge and personal power and control and discipline, they've created these environments to allow them to trade, for larger accounts. Even them, I mean, they're going to go through these moments and they're going to go through these times where they're staring at it going, there's a change happening here. There's a change technically. There's a change fundamentally with economics. Where are we? What should I do? Should I wait for confirmations? Should I go ahead and try and take a stab at it, as they would say, meaning, place their bets early? Sometimes the payoff is okay. A lot of times you see big traders, big, popular, well-known traders making serious, big mistakes. And to a certain degree, I think the human nature, a lot of us like to hear. We like to read it. We like to see, wow, that guy lost like that much money. What an idiot. I wouldn't. A lot of people think like that. But you don't know what you would do when you're in those moments. And it really comes down to it's your decision. I have a lot of decisions to make here. We all do. I have a lot of decisions to make while all of this is playing out. Do I go long? Do I go short? Do I wait? Should I, wait for something else? Should I do it now? Should I stop looking at the charts and wait till tomorrow? There's so many different decisions to make. And then if I do get into the trade, where do I take my profits? That's one of the other things. Not only do I need confirmation before I make a decision here, but if I can't find a target based on this trade, then I don't have anything to aim at. And there's no reason for me to be getting into the trade. Sometimes my targets don't pan out. They don't go as far as I think they do. It happens. And then that's another decision that I need to make based on my experience to know when the market is making a shift, and I've got to take what I can. So that's why sometimes you'll see a 10 or a 12 point move. Sometimes they look like they're going to go a lot further. And then all of a sudden things will change. So I've got to make a decision. Do I sit there and take the hit and take the loss? Or do I take what I can knowing that the whole thing's collapsing and reversing and it's not going to work out anyway? So there's so many different things that need to be taken into consideration, and you're constantly having to make decisions, and you've got to make the right decision. And very often, sometimes the right decision is just to do nothing, is to stay out. It is a decision. So hopefully that explains the very few trading opportunities I've had over the last week and a half. Nothing wrong with the system. Nothing wrong with me. I didn't go anywhere. I'm not going anywhere. I'm just waiting it out. I think that anybody who is looking at this is probably considering a lot of the same thoughts and is looking at the same thing. I mean, I know I'm only looking at the pound dollar. I could do the same with the euro dollar and some of the other currency pairs that we trade, but you get the point for the most part. I want to be careful. I want to be right. So far, I don't know if this downtrend is going to resume. It looks like I said earlier, if I was to sell it, I would be in the right direction of the trend, but we're also sitting at major support. I want to make sure that I don't sell it into that support, and then it really ends up being a bounce later in the day, and it becomes pretty obvious. So if I hesitate, it is because I'm waiting for confirmation. It's not so much a hesitation to act when I have a signal. I don't have a solid signal. I have different signals in different directions now. That's the conflict, and that's when I know I need to stay out and then wait for confirmation. So my system gives me clues. Again, sometimes you'll look at, you might say, okay, well, how do you know you have two signals or two signals in two different directions? It's not just the candle patterns. It's based on the structure, the price structure, the consolidation, the activity, what made it move lower or what caused it to bounce off of resistance or support. Whatever the case is, I'm taking into consideration all of this price action, where it broke out of, has it reached its target based on these other breakouts? Was it in previous ranges of consolidation? Did it break out? Is it retesting? All of that tells me that this candle pattern makes a difference or not. It's not just the candle pattern. It's the price structure and the behavior and the movement as well. And all of if there was any economic data prior to that was supporting a lot of this activity anyway, whether it was consolidation or a breakout. So again, never fear. I mean, don't fear. When you see fewer trades like this, it does not mean that there's going to be fewer trades forever. Well, it just doesn't work like that. We all know where this goes. It's okay. Everything's fine. This is exactly what we go through all of the time. Every year, every month, every week, in different cycles, different stages. The markets move in cycles. Hourly cycles, daily cycles, monthly cycles, interest rate cycles, business cycles. And we can go on and on and on and talk about all of these different cycles. And it's important that you understand these cycles and when they start to manifest or when they start to develop, where you can see them and then you can confirm them. It's important that you understand those. It'll make trading a lot easier as well. So again, it'll return. We're going to get our breakouts. We're going to get our reversals. We're going to get our big moves. We're going to get 100, 200, 300 point days. We don't get them every day, but we get them often enough. I just need to wait for the right environment and the right opportunity, and then we'll be taking them all over again. And 500, 700, 600 points, 400 points a week is pretty average when the market provides me the opportunity to execute according to my plan. Right now, I'm just waiting for confirmation.